What if I told you that tonight could go down in history as the turning point for crypto? That the SEC just made a decision so big, it could open the floodgates for altcoin ETFs and completely reshape the market forever? And at the same time, Coinbase CEO Brian Armstrong has dropped a bombshell update from Washington, saying he's never been more bullish on crypto market structure legislation. If you've been waiting for a clear signal that the bull market is warming up, this might be it. Let's break down what's happening and why this could be the biggest setup we've seen in years. First, the SEC has approved the listing and trading of the Grayscale Digital Large Cap Fund. This isn't just another ETF, it covers some of the heaviest hitters in the game: Bitcoin, Ethereum, XRP, Solana, and Cardano. These aren't speculative microcaps, these are the assets most likely to pull in major institutional money. Approval like this signals legitimacy, trust, and a whole new level of access for traditional investors. But the bigger shock came just hours earlier. The SEC approved generic listing standards for ETFs across Nasdaq, CBOE, and NYSE. That might sound technical, but here's why it's massive. Instead of every crypto ETF waiting months or even years for specific SEC approval, assets that meet certain thresholds can now be listed almost automatically. What once took 200+ days of red tape can now happen in weeks. This move just catapulted crypto into a whole new era of accessibility. So, which coins qualify? Right now, there are 12 digital assets that meet the requirement of having 6 or more months of futures trading on CFTC-regulated markets. That list includes Bitcoin, Ethereum, Dogecoin, Litecoin, Bitcoin Cash, Chainlink, Stellar, Avalanche, Shiba Inu, Polkadot, Solana, and Cardano. That's right, we could be entering what analysts are already calling altcoin ETF season. This means new money, new exposure, and new demand pouring into assets beyond just Bitcoin and Ethereum. Now let's talk market structure. Coinbase CEO Brian Armstrong released a video update from Washington just minutes ago, confirming he's in DC fighting for crypto legislation that will protect investors, encourage innovation, and ensure we never have another Gary Gensler situation. In his words, this legislation is a freight train leaving the station, and he's never been more bullish on its chances of passing. This isn't just talk, it's the first real sign that US regulators might finally give crypto the clear rules it has been begging for. And when the world's largest economy sets rules, the rest of the world tends to follow. From a technical perspective, the timing couldn't be more explosive. The altcoin market cap, excluding Bitcoin, has been consolidating since March 2024. Nearly 18 months of sideways action. Right now, it's flirting with a breakout. Ethereum, often seen as the roadmap for altcoins, is consolidating within a symmetrical triangle. A breakout above $4,700 could trigger a run to $6,000, while support sits in the $4,300 to $4,400 range. Meanwhile, Bitcoin dominance is slipping, and historically, every time dominance falls, liquidity flows into altcoins. That's when altcoin season begins. But here's the reality check. ETF approvals don't guarantee instant moonshots. When Ethereum's ETF went live in July 2024, the price actually dipped before resuming its climb. Markets are designed to shake out impatient investors before the real move happens. Add in macro conditions like falling interest rates, Jerome Powell's upcoming replacement as Fed chair, and increased liquidity from central banks, and we have the perfect recipe for a new cycle. But expect volatility, fake outs, and pullbacks along the way. This bull run is shaping up to be slower, steadier, and more controlled than 2017 or 2021, but also potentially more sustainable. Let's not forget Cardano, ADA. Futures for ADA only launched in March 2025, meaning it just barely qualifies under the SEC's new ETF rules. That kind of timing couldn't be more perfect. Analysts are eyeing $14 as a critical target in the coming months if momentum holds. And it's not just ADA, XRP, Solana, Dogecoin, and Chainlink all stand to benefit massively from institutional ETF inflows. So, here's the bottom line. The SEC has just cleared the path for altcoin ETFs, Coinbase is pushing historic legislation, and the charts are primed for breakout. This is the type of alignment, regulatory, institutional, and technical, that only happens once in a cycle. If you've been waiting for confirmation that crypto is about to heat up, this might be it. But don't get reckless. Prepare for fake outs, stay disciplined with your strategy, and always have an exit plan. The question is no longer, will altcoin ETFs happen? The question now is, are you prepared when they do?